Yeah, good afternoon, Tamanna. I think very clearly it seems consolidation is happening in the market. I think ever since the state election numbers were out, the markets actually rocketed very significantly. And I think markets are now consolidating for the simple reason that liquidity possibly in the coming at least a week or two could possibly be a little moderated because most of the FIs are off for their Christmas holidays. My sense is, but data points on the macro side are extremely strong. In fact, with the bond yields below 4%, now inflation fears more or less routed out. 2024, they are talking about three interest cuts. So I think this is definitely a lot of ammunition for the bulls. What is happening now is that a lot of profit booking is taking place, and I think it's a healthy sign for the market. My sense is that the broader market, action will continue, as you rightly mentioned earlier. But the index stocks could possibly remain in a very close range, and we could not see a major movement both on the bank nifty or the nifty. Clearly, the broader market would obviously sense a lot of opportunities because here the choices across sectors are quite, huge. So I would believe that it's a good time for investors who want to actually put their money on the broader market side when investors, especially the foreign investors, are not very clearly putting a lot of money in the market. But yes, I think you'll have to be very selective at these levels. It's not that all stocks would do well. The markets have rallied significantly, so it's going to be a clearly stock picking kind of approach which investors should follow. And I think starting January, once allocations start up again, you're going to see a lot of noise happening in January, which will actually again result in a very good uptrend in the markets. So Tamanna, I think we are very positive on auto components, and one of the auto component companies, which is into specialty chemicals, it's into carbon black. We are talking about Philips Carbon Black Limited, which is now known as PCBL. Now, interestingly, with the drop in crude prices, I think one thing is very clear that their margins are going to improve quite significantly. For them, raw material prices are very important. Plus, they also have a power generation setup, which actually is extremely profitable. And about a couple of months back, they bought a water treatment, chemical business, which is very profitable. It's called Aqua Pharma, and I think it's going to pose a serious amount of competition for players like Ion Exchange and Vatek Baba. Operationally, our sense is that this year may be a slightly flattish year, but going forward, hopefully, if the automotive sector does well, then I think in the carbon black business they enjoy a market leadership there. And plus, this business is definitely going to add and be EPS accretive. So here we could see a level of around 320, 330 over the next say 12 to 15 months. And the other stock, Tamanna, which we are very positive is Anant. It's a real estate player from Delhi, operates in the Gurgaon market. And what is interesting, it is one of those few companies which has got a very good combination of real estate and data centers. They have a capacity of 300 megawatts already ready, out of which I think about 24 megawatts will get operational from March 24. And I think you're going to see very strong numbers. This year we are expecting a profit around 220 to 30 crores. And obviously, compared to last year, it was just about 150 odd crores. So the traction both in the real estate and the data center business is quite unique. We could see levels of 350, 360. Tamanna, I think the luxury segment is one of the segment which has grown very strong, and I think it would continue to do so. In the overall automotive market, I think within the Indian markets also, what we are seeing is the larger cars are seeing a stronger demand, and the smaller cars are being ignored by the customers. As long as Landmark is concerned, they have been market leader in premium kind of foreign car dealerships, and I think now they're moving on to South would obviously expand their market share. The best part is that this is a very asset light business, and I think the top line growth as well as profitability growth can be quite significant as long as volume growth continues to be strong. And very large marquee names have already invested here, so the market is aware that this is a stock which is definitely liked by both the funds as well as the ultra HNI. So I think you're going to see this kind of action continuing. Hopefully, the luxury market grows. This would have a positive rub-off effect on the company. No, I think Tamanna, the demerger would definitely add a lot of value unlocking, for the shareholders of Siemens. But I think what kind of share transfer swap ratio is going to be announced is something very important. Obviously, the market is looking at a favorable swap ratio, and I think probably in the very near term we could see levels of 4350, 4400. This is a stock which has run up quite significantly. So I think at these levels, clearly, if the event doesn't happen in the very near term, then I think you could also see a little bit of profit booking because now the markets are completely looking at this demerger event as the next possible trigger. So I would probably wait a little and probably look at buying more on declines and then take a call. But I think if it happens in the next couple of months, then I think the market is going as per plan. We could see levels of even 44 or 4500. both Teamlease as well as Questcorp Tamanna are pretty solid bets because this is a very niche space and not many players are listed on the markets. Clearly, Teamlease is a market leader, and I think despite the fact that it trades at fairly expensive valuations, I think over the next say 12 to 18 months, hopefully we see the economy getting further traction. You're going to see a lot of interest in these stocks because manpower management and supply of credible kind of skilled manpower is something which these companies specialize in. So I think Teamlease would be a better bet. If somebody wants to bet on this sector, it's always better to bet on the market leader. My sense is that it's already corrected significantly from its peak, but I think for the real earnings growth to kick in, you will have to probably wait for the next 12 to 15 months. Stock specific wise, IRCTC, the opportunity is very large. In fact, they were catering only to the government. Once they move into the non-government side of the business, there is a huge opportunity. And I think Tata Sky, Sky Services, which cater to the airport, beverages segment is something which I think most market, participants are expecting. That could be a segment where IRCTC could enter. So the opportunity for growth is pretty large, and I think the best part for IRCTC is that it's a platform-driven business. The internet ticketing businesses makes EBITDA margins of almost 60%, and they are cash rich. They don't have any debt on the book. So I think getting the business scalable will definitely be a challenge, but yes, it presents a big opportunity. And within the rail pack, we believe Texmaco Rail is still looking pretty attractive. A couple of days back, they got an order of almost 1,400 crores. So most of the wagon companies are sitting on a very large order book. The visibility for revenue is at least next 2 to 3 years. So I would believe any correction in the market should be used to buy, stocks like Jupiter Wagons or typically Titagar or even something like Texmaco, where I think the visibility is strong and I think more rail wagon orders are expected over the next 12 18 months. Tamanna, the telecom hardware market is something which presents a bigger opportunity. I think the government has been promoting the Make in India strategy. So I think clearly markets are looking at ancillary players to the telecom companies. Most of the larger companies like Reliance Jio, Bharti, or for that reason Vodafone, these are large players. So one cannot expect a significant alpha or any immediate reaction on this kind of news flow. But yes, longer term, yes, telecom services would be more incentivized, I think, in terms of spectrum. I think one point which your colleague mentioned, I was very much interested to know that on the OTT side, I think there was some news reports that probably OTT would also require a license, and WhatsApp or Telegram channel that could also come under the new telecom bill. So that would have been more interesting because clearly that is also another segment which the government wanted to monitor and regularize via properly a regulation bill. You're right in saying that ethanol makes more money than sugar, and I think this policy change had to be made because it is just not possible to make ethanol by non-molasses route. So I think a lot of investment has gone in, a lot of money has been put on stake. So I think 17 lakh tons, which has been the cap, which we have been hearing from market reports, is definitely a short-term kind of relief. But I think once we have a normal sugar crop, I think these restrictions would be removed. Coming to the sugar stocks, I would believe that companies like Balrampur Chini, Triveni, would obviously be better bets because there's a large pent-up demand for ethanol. And ethanol prices are obviously going to be hiked in the next couple of months. So that possibly, directly adds to the bottom line of these companies. So incrementally, there is no increase in the cost of production. So I think you'll probably have to see larger players with large ethanol capacities with good molasses capacities. And I think Triveni and Balrampur Chini, I think definitely if the market is correcting, you're getting an opportunity to buy. I think one should look at the next 6 to 12 months because these are all bets which would obviously hinge on the policy kind of, change. And I think as Tamanna said, 20% blending by 2025 would demand a lot of ethanol, which currently, India is short of. Our choice would be, from the capital goods major Cummins, India. We believe a lot of value yet lies to be uncovered. And I think we could see very strong numbers, in the Q3. More importantly, with the kind of focus on hydrogen, Cummins is one player which has got a very strong product bouquet already lined up. So I think you're going to see a lot of news flow in the coming year. So my sense is, from a short to medium term perspective, Cummins on any decline or even at the current odd levels could give a decent risk reward over the next, couple of weeks. But I think longer term, a lot of value could come in even from the current times. My guess is that, companies like NMDC or for that reason, Midani, these are companies which enjoy very strong balance sheets. And I think the China stimulus is something which has been a narrative for a very long time. Even as of now, China has been largely absent from the global market. So unless, the economy improves and obviously demand kicks in very strongly from China, we are unlikely to see a very major bump up in global metal prices. So I think, unless global metal prices get significantly re-rated, we are not going to see very significantly earnings growth numbers, at least for quarter three and quarter four. So I think we'll have to wait for some time. This metal pack seems to be more like a trading bet, and we'll have to play on the momentum rather than on the fundamental, because even as of now, it's more of narrative and less of the real earnings numbers coming out. The pharma pack, Tamanna, we believe that companies like Piramal Pharma, which has staged a very strong turnaround, I think that could be a very interesting bet. The management is very hopeful that possibly in the next 6 to 8 months they could be ramping up their business quite significantly, both in terms of financial numbers as well as a lot of new products on the table. And as far as hospital stocks are concerned, we believe the larger players like Apollo, Narayana Rudalaya, or for that reason Fortis, which is a large player. I think these are established companies, and I think wherever hospitals operate in specialities, I believe that the margin improvement is really going to kick in from these segments. So I think probably these 2 3 companies in the hospital space could definitely be a good kind of stocks collection, at least for the next 12 18 months. And I think Piramal Pharma has been our top bet. We believe that even at the current level, somebody who enters as of now could possibly see a significant risk reward over the next 12 15.